Hello and welcome to this session. This is Professor Farhad, in which we will discuss risk assessment in a SOC engagement. In a SOC engagement, the service auditor needs to carry out risk assessment procedures that help them do what? Identify and evaluate the risk of significant inaccuracy. Now, why? Why would they do that? Because this assessment forms the foundation for planning and executing audit procedures that specifically address these identified risks. So when you perform a risk assessment, you are trying to identify means what? Identify means pointing out potential weaknesses and try to evaluate the risk of significant inaccuracies. You're trying to say, okay, we might have problems in this area, and the problem might be significance, less significance, or more significant. Therefore, we have to spend more time there. Now, why do we need to carry this out? I just told you to identify risks. I just told you to identify risk. The primary goal is to identify any risk of material misstatement, which is situations where information is not accurately presented to the point that could affect decision by users of the service organization report. That's one part of it. The other part of the risk assessment is to tailor audit effort. Understanding these risks after they're identified help the auditor design specific audit procedures that are directly relevant and effective in addressing the identified risk. Well, it's basically a risk-based or a targeted approach, which will increase what? Efficiency and effectiveness of the audit. We cannot audit everything. If we can audit everything, we don't do risk assessment. If that's the case, well, if it's not, then we have to do these risk assessment and go based on a risk-based approach. In this session, we'll dive a little bit further into the risk assessment. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
What areas do we need to find out risk about? Well, in a SOC engagement, 3 areas, and I'm sure you know this. First, understanding the system description preparation. The auditor needs to understand how the organization prepare its system description. And this includes understanding how control objectives are determined. In other words, how do they determine their controls? The risk here is that if the description is not correct or incomplete, subsequent assessment of the control design and effectiveness may also be flawed. So simply put, we look at the description first. If there's any problem with the description, there's going to be a problem with the design of these controls. Then we're going to look at the assessing control design. The auditor will evaluate whether the controls as designed are capable of meeting the control objective effectively. Well, this involves what? Looking at whether the controls are appropriate for the risks they are meant to mitigate and whether they are integrated adequately into the organization overall system. Now what we are looking at is, are the control suitably designed? Are they working properly to mitigate the risk? That's the second step. Then evaluate an operational effectiveness of the control. This is in a type 2 SOC engagement. The auditor also assess whether these controls has been operating effectively over a period of time. This is not just about whether the control exists at this point, but whether they function effectively in practice consistently throughout a period of time. So by thoroughly performing these steps, the auditor can identify potential risk, and this is what we mean by risk assessment, in the design and operation of the control. And the design by understanding the description and assessing the design, and the operation of control, which is evaluating control effectiveness. That could lead to material misstatement in the service organization description of its system. Also, this detailed understanding allows the auditor to tailor audit procedures that are responsive to the specific risks identified, ensuring a robust and reliable audit process. So when we perform risks identification, what do we look for? Well, we could look at act from within or outside the organization. This includes both deliberate actions such as fraud or sabotage, and accidental events. Again, it could be from outside, inside the organization that could disrupt the system operation or compromise data. This is an area that we could identify. Also, threats and vulnerabilities. Identify potential dangers and weaknesses within the system that could be exploited to cause harm or disruption. The use of subservice organizations. Many service organizations outsource certain functions to third party. And what is that going to do? That's going to expose you. This risk category concerns those subservice organizations that handle sensitive information on behalf of the primary organization. The security and integrity of the data managed by these third parties are crucial, as any breach or failure in their system will impact the main service company. Also, what could be a risk is employee access. The type of personnel who have access to sensitive systems and information can be a significant risk factor. Now, here what you have to do, you want to make sure that employees, that only authorized employees that are well trained can access these systems to maintain strong security. Also, what could be considered a risk is lack of complementary user entity control, CUECs, or complementary subservice organization control. Those controls are expected to be implemented by the user's entity or the subservice organization respectively. What happens if these necessary controls are not working properly? They are missing. It increases the risk that the service organization controls will not function as intended. Is this a complete risk? No. Risk identification can take many forms depending on the company, the industry, the context, so on and so forth. Let's talk about inherent risks. Inherent risks are risks that exist before any controls are put into place. And we looked at those inherent risks in financial accounting, part of the something we call the audit risk model. Part of that model was inherent risk. So inherent risk, as far as SOC engagement are concerned, they impact how the system is described and how effective the organization controls are. Simply put, same concept. Risks that exist and what could lead to increase those inherent risks. One of them could be changes in operating environment. Update to laws, regulation, or industry standard might necessitate modification to existing control or the introduction of a new one to stay compliant and secure. So one of the inherent risks is every time you have a change, whether that change is you change a software, you change a law, you change a regulation, well, you expose yourself because maybe the existing control are no longer working. Well, also, if you have new people, if you have a high turnover, hiring new staff who are responsible for executing manual control can increase the likelihood of errors or inconsistencies in control operation, especially those that are not yet fully trained or experienced. New or revamped information system, as I just mentioned, if you introduce a new software, new IT system, or significant modification to a new one, can disrupt how controls are executed and how they interact together because it's a new system, possibly leading to gaps in control effectiveness. Another part of inherent risk, it could be rapid growth. The company is growing very fast. An organization that experiences quick increases in its customer base may find its existing controls are no longer adequate to handle this large scale of operation, and as a result, they might be cutting some shortcuts, potentially reducing control effectiveness. Also, new technology. And anytime we have a new software, I mentioned this several times, or technologies that perform risks differently from the previous solution can change how user entities interact with the system. And as a result, require adjustment to controls. And that's why once we have a new system introduced, we have to revisit our controls. New business models, product, or activities. Diversifying into a new business area can divert resources and focus from well-established controls affecting their effectiveness. Corporate restructuring, basically any changes, whether that changes in personnel, in technologies, in laws, and regulations will create inherent risks. Changes in ownership, organizational structure, changes in reporting lines and responsibilities, impacting how controls are managed and executed. If you are expanding into new geographical areas, employing staff in overseas location can introduce challenging in managing controls. For many reasons, different cultural, regulatory environment, distance, so on and so forth. Of course, new accounting standard, just like we have a new technology, new accounting standard basically have the same effect. New accounting rules often require updates to software systems and controls to ensure compliance and accurate reporting. and any changes in the overall economic conditions. Those are all could be part of inherent risk. The more of those you have, the more inherent risk you have, whether you have a traditional audit or a SOC engagement. That's the point that we are making here. How about if we have an internal audit function? That's good. If you have an internal audit function, and for the service auditor, maybe when a service organization has this, it's important for the service auditor to incorporate an understanding of this function into their overall risk assessment, and the service auditor might use their help. So the auditor must understand the responsibilities, scope, and objective of the internal audit function. So it's essential to know how it's integrated into the organization, because this is going to give us an idea, a deeper idea about the controls, including its place in the hierarchy, which shows its reporting line and any potential constraint of or influences it may encounter. So the first, they study the internal audit function itself. How does it work within the company? How important is that? What's the reporting lines? The auditor should also understand the internal audit team's current and planned activities, including the types of audit and their scope within the organization. And of course, this is very helpful, this understanding, in assessing how these activities impact the overall control environment and how they can inform the auditor's evaluation of control effectiveness. Now, the auditor themselves, they will have their own tools in conducting this risk assessment. So a service auditor may employ a variety of procedures to gain a deeper understanding of the service organization system. One thing is to do what? Inquiries, conducting inquiries. The auditor engage in discussion with various stakeholders within the organization, including management, those charged with governance, and potentially other knowledgeable employee. Now, always that's a good idea, but you want additional evidence along the inquiries. The auditor used their judgment to determine who might provide insights into the control environment, operational challenges, and risk areas. Again, inquiries is a type of evidence, but it's not the most effective. You want to, corroborate any oral presentation. Observing and inspecting. The auditor may observe operational processes to see it themselves, to understand how activities are carried out and how control is being carried out in real time. Because why do we need this? Because they may tell you this is what we do. Even the description tells you this is what we do. But are they really doing it? You would observe. So also the auditor inspect documents, reports, in both printed and electronic transmission record to verify the accuracy of information and the operational effectiveness. Of course, you want to inspect those documents. Other tools will be inspecting agreement, reviewing agreement between the service auditor and its clients or business partners. And this helps in what? This helps the auditor understand the commitment the organization has made. Because remember, as auditor, you want to look at the motivation of the service company. Just like when you audit a company, financial statement audit. Why are they getting the audit? Are they going for an IPO, initial public offering? Are they getting a loan? Is this a mandatory audit? Same concept with the SOC engagement. You want to know what's their motivation, and usually the commitment that they're making, their service commitment, is the motivation. Therefore, you want to take a look at their service commitment. That's important. So the expectation of the user's entity and any specific control environment, control requirement, these agreements may impose. Also, reperforming controls to validate the effectiveness of a control. The auditor might do it again. In this direct testing, ensure that the control is functioning as intended, because the auditor is doing the work and is capable of producing the correct outcome. Also, you want to review external report, like the auditor reads report from regulators, internal auditor, other specialists that can provide external perspective on the control. And this is going to highlight areas of concern or recommendation that are critical for the auditor risk assessment. Now, which tools would the auditor use? They might use a combination of these tools. The service auditor can form a comprehensive view of the service organization control environment and assess areas of potential risk more effectively depending on what they're doing. If they need to reperform, they may reperform. If they need to ask questions, they will ask questions. So what are some auditing methods that we can use by the service auditor? The service auditor may employ various methods to conduct risk assessment during a SOC engagement. For what purpose? To understand and evaluate the service organization control environment. They might do what we call a walkthrough. Walkthrough are practical exercises where the auditor traces a few transactions from the beginning till the end through the system, from initiation till the end. So this process helps the auditor observe the actual application of controls and the accuracy of the description, if it's really we follow the description? Are we getting to where we need to get? Also, a walkthrough could reveal discrepancies between how the controls are described and how they function in practice. So this is how they say they are functioning, and this is how they actually functioning. How do I know the difference? I'll go through a transaction. Other auditing method will be what we call concurrent procedures. So while gathering information about the service organization system, the auditor might perform risk assessment procedures simultaneously. And that's fine. This involves verifying that the system description adheres to this description criteria. If you are reading their description, basically you are assessing the risk and assessing whether the controls are both appropriately designed and effectively operational to achieve the specified control objective. Sometimes you carry out a step and it serves more than one purpose. By doing this concurrently, auditor can efficiently identify areas of risk while also evaluating the control design and operational effectiveness. When you read in the description, you will try to also learn about the design, and if you can test a few transactions, it shows you the operational effectiveness if you are going through a type 2. Also identifying fraud and compliance risk, and this is important part of the risk assessment. Why? Because if there's any fraud, well, that's going to give us a lot of headaches. Any compliance risk, same thing, it's going to expose the company. So a crucial part of the risk assessment is identifying the potential for fraud and non-compliance with laws and regulation. This includes evaluating the risk management override control. What does that mean? Who can override the control? Management. So we want to see if there's any hint, anything that lead us to any management override of control. That's risky, which could lead to unauthorized actions or misstatement, because the management can override the controls. You can have the best controls, but if they are being overridden by management, anything could happen, including fraud and non-compliance. So auditor also looks for asset misappropriation, which is theft, and the creation of false misleading documents or record. These assessments are essential to make sure the integrity of the financial reporting and compliance with applicable regulation. So overall, these methods and many other methods help service auditor build a detailed understanding of the organization control environment and identify potential significant risk that could impact the reliability and the accuracy of the SOC report. You want to have a good understanding of risk assessment, really good understanding, because risk assessment is something that you will see in this section and something you saw in the auditing exam, information systems and control, and the auditing exam. So risk assessment, if you want to summarize it, it's basically trying to predict what are the weak areas, the gaps, the areas that we need to focus on the most because we don't have unlimited budget. Let's take a look at this multiple choice question from farhatlectures.com. During a SOC engagement, an auditor observes that a new piece of software technology has been implemented. What should the auditor immediate next step be? So what should the auditor do next when a new software is introduced? A. Assess whether existing control adequately address risks associated with the new technology. I would say definitely this is a good answer, yes. But let's look at B, C, and D. Recommend discontinuation of the old software immediately? No, that's not the case. We have to wait sometime. Sometimes we have to run both software at the same time to make sure they're working properly. So that's not the best thing. That's not the best answer. Increase the IT budget to accommodate further technological upgrades. We don't know if that's going to affect the IT budget, and that's not what we do next anyhow. That's not the job of the auditor. Conduct a cost-benefit analysis of the new software. No, the auditor has nothing to do with how much they pay for it, whether it's beneficial for them or not, unless they hire the auditor to do a cost-benefit as a consulting engagement. But no, assess whether existing control adequately address risk associated with the new technology. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you, especially if you're studying for your information systems and controls exam. Invest in yourself. Good luck, study hard, and of course, stay safe.